a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about natural resources ETFs. These natural resources can act as an inflation hedge, and we know that inflation is the biggest headache for investors lately. It is running at a 40-year high, and Friday's CPI report was much hotter than expected. It was the hottest surge since December of 1981. So the biggest concern is that whether the Fed would tighten the monetary policy very aggressively and push the economy into a recession, because the Fed has a very difficult needle to thread now, that they want to tame inflation. At the same time, they do not want to cool the economy too much. They don't want to the policy to result in a recession. So it remains to be seen whether the Fed would be able to guide the economy into a soft landing, but investors have been pouring a lot of money into natural resources ETFs, because even though some reports suggest that inflation could be close to peaking, it is expected to stay at elevated levels in the months to come. And historically, these natural resources such as oil, gas, precious metals, timber, etc., they have provided some hedge against inflation. So we will take a look at 3 ETFs that have been very popular with investors this year. So the first one I'm highlighting is by FlexShares. It is the biggest ETF in this space with over 9.1 billion in assets, expense ratios of 46 basis points, over $1 billion in inflows this year. This holds energy, agriculture, metals, timber, water companies. To learn more about this ETF, you can go to the quote page on Zacks.com, read our research report articles. I also did a podcast with FlexShares recently. Then using the link, before that I wanted to show you that a nice dividend yield too. You can use this link to go to FlexShares webpage for the ETF. You can read about the strategy, you can read the research and look at what exactly it holds. So energy companies, Exxon, BHP, Shell, Chevron, these are among the top holdings, and fertilizer food companies too. Nutrien, Archer Daniels. So energy is about 33%, and agriculture about 27%. Looking at the geographical allocation, US is about 37%, then UK, Canada, and other countries. The second one I'm highlighting is by State Street, SPDR S&P Global Natural Resources ETF. This is also very popular with has about 3.8 billion in assets, of which more than $1 billion has come this year. Expense ratio of 40 basis points. Again, to learn more, you can go to the quote page on Zacks.com, a dividend yield of 2.2%. And then using the link, you can go to the, so this is the State Street webpage. This is the Zacks.com quote page for the CTF, 3.9% dividend yield. And you can go use the link to go to State Street webpage for the CTF and see what it holds. So you will see that BHP, Shell, Nutrien, ExxonMobil, similar companies, similar type of holdings in this ETF too. And in terms of geographical exposure also, this is also pretty similar, 36% US, then Canada, UK, etc. And you can look at other details about this ETF from the web page. And the third one I'm highlighting is by iShares. It is iShares North American Natural Resources ETF. The ticker symbol is IGE. This holds US listed natural resources companies. This is also quite popular but smaller compared to the other two, 1.2 billion in assets and more than 470 million inflows year to date. Again, to learn more, you can go to the quote page on Zacks.com. And using the link, you can go to iShares webpage for the ETF. You can read what it holds, look at its strategies. So again, similar companies, Exxon, Chevron, ConocoPhillips, in terms of exposure, a lot of exposure to oil. You will see more exposure to oil compared to other to ETFs, and then gold. And again, oil and some other metals companies. On the last slide, I have the competitive performance with respect to versus the S&P 500 index. You will see that the iShares product has delivered the best performance, partly due to very high exposure to oil and gas industry. So it remains to be seen whether energy companies can remain that hot. And we are seeing today that everything is falling because investors are selling everything today after Friday's CPI report. And for the purpose of reference, we are talking on Monday, June the 13th. The other two ETFs have also significantly outperformed the S&P 500 index. The S&P 500 index is now down about 7% over the past year, and the two ETFs by FlexShares and State Street, they are up between 12% and 20% over the past year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, and I'll see you next week.